the Fed is trying to create inflation, but the commercial banks aren't eager to loan the money into existence. And so that money is only really being loaned to their buddies on Wall Street, who are then able to inflate asset prices higher, the hedge funds and the big funds and the big money and the high net worth people. But the people on the street aren't getting that money. And that money is sitting in reserve accounts at the Federal Reserve and in accounts at the commercial banks, just not loaning it into existence. So the Fed has made it very clear that they're going to try to actually pump money into the public directly by usurping the commercial banks, going directly to the public. You're seeing more and more desperate efforts and measures to get money to the people. This is ultimately going to be very, very, very inflationary. And what the Fed is doing ultimately is sowing the seeds for the destruction of this currency.
Welcome back to Liberty and Finance. I'm Reluctant Preppers. We have a returning guest who's well anticipated by our viewers who always submit lots of questions ahead of the interviews. This is Andy Schectman. He's the CEO of Miles Franklin Precious Metals Investments, and he's joining us this Friday, October 2nd, 2020. Andy, thanks for joining us again.
Thanks for having me, Duncan. It's always a pleasure to see you and to be here.
If we wait more than a couple weeks between times that we have you on, we get please ask Andy this or please ask Andy that. I start getting emails on the side or comments submitted on other things. So it's like we just got to stay with the routine and keep having you back here because people have so many questions. And it's understandable because as you've explained in the past and as Rick Rule has emphasized, there's only like 0.5% of people's investments in the country that are in either precious metals or anything related to precious metals. So it's uncommon knowledge, and we're here to try to help broaden people's understanding, make sure that they get their questions, or very reasonable questions, addressed, and improve the availability of knowledge so we can help them be aware and prepared to take care of their family.
Absolutely.
Before we jump into viewers' questions, I always like to give you a chance to bring us up to date on what you're seeing on the ground within the supply chains and the precious metals wholesale, retail market of the dynamics and what you think are driving those dynamics. So could you just bring us up to date? It's been almost a month since we've had you on.
Yeah, absolutely. Well, I think the first thing that sticks out to me, Dunnigan, is the pullback. When we look at the pullback from a standpoint of what's happening in retail, I don't think anyone sold an ounce over the last few weeks. No one's selling any product. So the drawdown in the price of gold and silver over the last couple of weeks was a function of, here again, a drive-by shooting by the people who are trying their darndest to control sentiment, to create a perception of reality. In terms of who's selling product, nobody's selling product at all. And
just to clarify, you mean you're not
Yes.
seeing investors trying to get rid of silver, for example, or you're not seeing dealers, or that what you're saying is there's demand. Demand is remaining strong.
Yes.
Okay.
Demand is very, very strong, and no one's selling. So when you see a paper price hit like that in a very ferocious fashion, it's done to create effect, to create a perception of reality. And it has no bearing or no semblance of reality with what's happening here on the ground. And I think you'll find that to be true no matter who you talk to in this industry. They're not seeing people selling. They're seeing people buy on the dips. And our business goes up in those environments, not down. I think in large part to people like you who have explained to people by getting this information out there that this is indeed happening. And if you look at any bull market, I don't care what bull market you look at in retrospect, you will see wisdom in accumulating on the dips and not chasing the rallies. This has been a subsidy of sorts. And look, I'm not a permabull. I look at the precious metals market, done again, and I see very few places that I would rather put my own money, no matter how much money I had. I think that it's a fool's errand to chase the stock market, looking at the bond market, running negative real yields. That's obviously not a place to be. So for me, my chosen path is that of precious metals. And I try to be objective when I go on a show like yours. I try to look for a reason why I shouldn't feel this way. Quite frankly, I don't. And when I see the action in the marketplace, it only strengthens my resolve when I see a price that has zero relationship to what's actually happening and how difficult it is to find stuff. I know that in time, my beliefs and my conviction will win out.
Along the way, you mentioned this activity of intentionally, not organically, but synthetically producing surplus selling of futures on the COMEX to drive down the price. That's an old MO that we've talked with Bill Murphy from Gold Antitrust Action Committee, GATA.org, many times about, and others as well. There's been some hope on his part and on Ted Butler's part, who we're going to be having Ted Butler back on again soon, that they're seeing a new type of market action on the COMEX. At least they were like throughout late August and most of September. But this last week or two has seemed like more of the same. We have a question from Brad Holloway who says, Andy, in the light of the slap on the wrist settlement with J.P. Morgan, that's from the Department of Justice, does this clear the path for years to come of continued precious metals manipulation, especially of silver, to continue?
Well, as Ted has talked about in his latest article, he's very optimistic. He thinks it's much more than a slap on the wrist because they were given a deferred prosecution, I guess it's called, or something along those lines, where, in other words, if they violate the terms of this agreement, if they go back in and start shorting it again, then they're going to get in much more severe trouble. He believes that a light was shown upon the market rigging. You're seeing fines $920 billion or $million rather to J.P. Morgan. You're seeing fines to Scotia and to Deutsche Bank. The light has been shown upon the rigging and the manipulation, and it's real. And we've been talking about this for a long time but to some degree, I feel vindicated. But look, in the end, the only way you can successfully manipulate a market over time, done again, is to push it in the direction that it's going. And I think that in the end, the commercial banks will have less and less effect because as long as governments keep racking up trillions of dollars out of thin air, and as long as central banks continue to hold interest rates down to next to nothing and keep asset prices inflated, you'll see gold and silver do very, very well. You pull J.P. Morgan out of being able to hold down the price, I think certainly one would suspect prices ultimately will move much, much higher. And I'm optimistic for that. I would be lying if I said I didn't. I was somewhat disappointed by the fine and the penalties. I mean, the traders are still facing criminal prosecution. The bank itself kind of, $920 million is nickels and dimes to J.P. Morgan. But more importantly was the agreement of deferring the prosecution or deferring the penalty as long as they behave themselves. So, maybe this will keep them from controlling the price. And maybe, just maybe, we'll see a semblance of a free market as we move forward. That's the hope anyway.
Some people are concerned about the future of their holdings in precious metals, and particularly the rule changes that may come about taxation on capital gains tax. Victory CSA says, after the monetary reset is complete, do you believe that gold and silver will still be taxed as collectibles, 28% long-term capital gain, or do you believe the tax will be lowered or removed, or?
It's a good question. I guess it depends to what degree gold and silver have a role in what comes next. And I have argued since the very beginning of this year with you that I felt indeed gold will have a very central theme in what comes next. The Tier 1 revision of gold, to me, is the perfect underpinning for credibility to a currency. It is the only thing at this point that I think will lend credibility to a new system. You won't get people to drink the Kool-Aid again unless, and I don't care if it's tied to a blockchain, if it doesn't have a tether and some sort of immutable tether at that, then yeah, I think it won't take hold. So if I had to guess, gold will be center stage. It will be part of a distributed ledger, at least to validate the gold held in backing of the new dollar, whatever it may be. And I would think that perhaps you'll see a change in the taxation. And I don't know if it'll be a windfall tax or they'll just change it to ordinary income or whatever it may be. I don't know, but it would seem to me intuitive that indeed, if gold was part of a new system, that they would remove the archaic 28% collectible rate from it. And it is appearing more and more likely to me that we will see some sort of a new system. They were talking about, the Fed was talking about just recently instituting a new Fed wallet. That was coming directly from the Fed. They're talking about it. And the reason they're talking about that, Dunnigan, in a nutshell, is that the Fed is trying to create inflation, but the commercial banks aren't eager to loan the money into existence. And so that money is only really being loaned to their buddies on Wall Street, who are then able to inflate asset prices higher, the hedge funds and the big funds and the big money and the high net worth people. But the people on the street aren't getting that money. And that money is sitting in reserve accounts at the Federal Reserve and in accounts at the commercial banks, just not loaning it into existence. So the Fed has made it very clear that they're going to try to actually pump money into the public directly by usurping the commercial banks, going directly to the public. You're seeing more and more desperate efforts and measures to get money to the people. This is ultimately going to be very, very, very inflationary. And what the Fed is doing ultimately is sowing the seeds for the destruction of this currency. So to see gold have a underpinning of a new system, to me, becomes more and more realistic by the day. And I would have a hard time believing in that environment that a 28% collectible rate would apply. And quite frankly, I would have a hard time seeing a windfall tax as well, if indeed it becomes part of a new system, which I can't see how it doesn't.
Yep, and again, we've mentioned in the past, and I'll plug them again here, people look up Representative at the U.S. Congressman from West Virginia, Alex Mooney. He's got the HR bill, I believe it's 1089, but I'll put it in the comments here saying the Monetary Metals Tax Removal Act, because he's pointing out that taxation of monetary metals just doesn't make sense unless you're going to give people a capital loss for the destruction of the value that's in their currency if these are monetary metals.
Not only that, it's hard to find any other investment where you start 6, 7, 8, 9% behind the eight ball before you even receive it. It's not right. God bless Mr. Mooney. I think that he's doing a noble endeavor, and I wish him all the best. And he has my support, that's for sure. Really is. It doesn't make sense at all that gold issued by the United States Mint, which is legal tender, would have any tax on it whatsoever. So it just doesn't make sense. And we're crossing our fingers, both fingers and both toes, if possible, to that he has good luck. Wishing him the best.
Back to the Commercial Metals Exchange, Blues Digger 66 says, Andy, with the addition of 70 new refiners approved for supplying the CME with metal, will this allow JP Morgan to continue shorting the silver market without having to worry about cutting into their own reserves? If so, I would predict that the price goes sideways until the demand finally overcomes this new supply.
No, it does not. It does not allow them to do that. What it does is it reeks of desperation. It reeks of desperation because what you're seeing is people standing for delivery. The term rehypothecation is something people should be familiar with. Rehypothecation means if this is a bar of silver right here and I'm holding it, 57 people think they own this one bar, but so do you. And if everyone stands for delivery, 56 people aren't going to get their bar. You might, or you might be one of the 56 who don't. The fact that the COMEX has shotgunned and fast-tracked these other refineries, many of which are in China and in Asia, to every mom, pa refiner on the planet basically is now being accepted as a COMEX-approved bar. That to me just absolutely reeks of desperation. It has nothing to do with JP Morgan being able to not get rid of their own stash or not. Because what it is that if you naked short something, you don't have it, you have to come up with it. If you are shorting against inventory, well, that inventory is right there. But if you are naked shorting something and all of a sudden you're called on the mat for delivery, you need to come up with product. Well, if there's only, a certain number of a finite number of approved refineries, and you can't find any of those bars, then what happens? So they expanded it. It just reeks of desperation. I find it to be on top of when they changed the gold contract to include a fractional interest in a 400-ounce London Good Delivery bar. Here again, reeking of desperation. These are the we're in the seventh or eighth inning in that respect of a 9-inning baseball game. When you're talking about, or maybe in the bottom of the ninth, when you're talking about the moves that the COMEX is making to forestall a run, to forestall force majeure, to hold back the tide of all of these very sophisticated hedge funds and wealthy investors and family offices and sovereign wealth funds, they're pulling their metal off the exchange. And think about that for 1 second. If you are a sovereign wealth fund, or let's call it a family office, I work with many family offices. This is just a very wealthy family who made a ton of money in some endeavor over the years, and they're using the tax laws of a family office to shelter their assets. This is not a big institution. These, in many cases, are just someone like you or me who was fortunate enough to do very well and then opens a family office. Well, they may have $500 million to play with. So what if you decide you're a family office and you want to pull some contracts off the COMEX because you don't trust what's happening? A silver contract on the COMEX is 5 1,000-ounce bars. I mean, you're talking 350, 400 pounds just for that one contract. People are pulling off dozens or hundreds of contracts. This does not make for easy storage or easy logistics. The point of it is it reeks of desperation. I think it goes against what J.P. Morgan is trying to do. But because of what the commercial banks have done, because of all of the shorting of the market and the controlling of the price, the COMEX is now having one of those moments where they're like, oh boy, we better do something. Or very quickly, we are going to be exposed. What's the old statement? The emperor isn't wearing clothing, or something along those lines. They're going to expose the emperor. They're going to lift up his skirt and see that he's naked. And that's exactly what I think is happening with the COMEX trying to shotgun 75 or 80 other refineries across the globe as approved refineries for COMEX purposes. Not good.
As more and more people look closely at, for the first time perhaps, at owning precious metals, they start to think through, which is good. It's interesting because on Reluctant Preppers for the last 8 years, we've been talking with people about thinking through scenarios, and you look at and analyzing all the risks and the risk profiles in different scenarios. So people are looking at how am I going to purchase metals, and how do I know I can trust the outfit that I'm buying them from, the integrity of the product that I'm going to receive? Then do I need to hold it physically? If I do, where am I going to store it? If I do that, how am I going to protect it? Is it going to add, I want it in my hand, but I don't want to necessarily have to protect it myself, so I want others to protect it for me. And they just start going down all those risks, which is great. We have some of those questions here. One about storage is asking about the limits to which vaults will go to protect metals that are stored there, even if it is potentially against government confiscation. So there's this question from Low Blood Pressure is asked about, are Miles Franklin's vault guards ready to have a shootout with the U.S. Army to protect your customers' gold from confiscation? What about metals vaulted outside the U.S.? They might have a chance against the Canadian government. We've spoken with Rob Kirby, and he's talked about the Canadian military in different terms. But anyway, we wanted to get just a level set, a reality check with you about what is the actual level of responsibility of either a Miles Franklin vault or any vault in terms of safeguarding the metals that are stored there on behalf of a client. And specifically, I guess then we'll circle back on this question, talks about in the face of potential government mandated action. So can you just tackle that one head on?
I'm going to come back to that in a second. I'm going to answer that. But people should be asking that same question about their broker dealers, about their banks, about wherever they're. I know guys like Jim Sinclair who will tell you if you own stocks and you don't pull it off the exchange and hold it in your name, the physical certificates, you're a fool. And the banks, which are woefully undercapitalized, should you leave any money in there at all? These are questions people should be asking. Counterparty risk, I believe, will take a center stage in the future, in the very near future, on many different levels, whether you're talking stocks, whether you're talking bonds, whether you're talking bank money, the term rehypothecation or undercapitalized and over leveraged. These are all, listening to Alasdair Macleod when
That's
he
what I was going
comes
to
on
say.
your
We're having him
show.
on next week. He's
Yes,
got his list of
yes.
undercapitalized banks. Absolutely.
There you go. Well, these are problems everywhere. So this is one of the reasons for removing your counterparty risk and being your own vault. Now, whoever would think that a couple of decently paid Brinks guards are going to get into a shootout with the military, maybe what are they drinking? No one's going to do that. We live in a world where we do the very, very best we darndest can, period. We try to, in a world of imperfect choices, we try to find the best. I used to be involved very heavily with Switzerland. Our business centered on Swiss assets. We still work with the folks, BFI Consulting in Zurich, some of the finest people I have ever known in my life. To this day, I will tell you, some of the finest ever. Still work with them. But there was a time when I could not believe that the Swiss government would join the United Nations, would kick Americans out of Viamet and all of the banks, Credit Suisse, UBS, would delink gold from their constitution. All things need to be reevaluated, even the best laid plans. Our relationship with Brinks, done again to me, is as good as it gets. I keep so much of my own material in Brinks Montreal and in Brinks Toronto, and I have not even a moment of anxiety about it. But when we get into a period of time, if we did, heaven forbid, where the military was storming the doors of Brinks, at that point all bets are off. But let's hope that we don't get to that point. For me to answer that question any other way would be a lie. Simply speaking, I think you look at all of the choices and all of the risks and weigh them. I think that, to me, is a risk that I don't think we'll have to cross or to deal with. I think you'd have a much greater likelihood of, God forbid, your home burning down or your home being robbed than the army storming the door of Brinks Montreal. I think you hope for the best, you prepare for the worst. That's why you keep stuff in several different places. Don't keep it all in one location. Go bury some in your backyard. Be a midnight gardener. Keep some in a vault in the United States. Keep some in the vault in Canada, maybe in Zurich, whatever. The point of it is that these are all what if impossible questions to answer. So I think when it comes to the what if questions, you try to factor in all the what ifs, do the best you can. That's exactly what you do. All of the preparing that you do, those are all what ifs. You're not sure what's coming, so you make contingency plans. You do the very best you can. And we do the very best we can. And I'll tell you something, in 30 years of working with people in this industry, the folks at Brinks are as honorable, honest, straightforward as anyone I know, anyone I do business with. They hold the majority of my own personal metal. Is it the best thing? No. If I didn't own a precious metals company, I'd keep it all here. I'd hide it real well. But I can't do that. That's unrealistic. I don't even feel comfortable with any gold and silver at my house because of the position that I'm in. But for people out there, be your own vault. Hold it until you can't feel comfortable anymore. And if you don't feel comfortable anymore, then I will tell you that the folks at Brinks, and especially Brinks Montreal, Toronto, and Vancouver, who I've had the great pleasure of meeting and eating with and becoming friends with for the past 15 years nearly, are the best in the business. And I have zero qualms about that. Or for that matter, any of the facilities that we work with, we make darn sure that they're as good as they can possibly be. But here again, what if? And the what ifs are impossible to answer. Just figure out contingency plans. If you're listening out there and asking these questions, have contingency plans. Don't put it all in the same place, and hope for the best. I think that's all you can really do.
We're going to keep, as long as we've got you on the hot seat, there's a question here that's from Cliff Baker, who says, how come Miles Franklin doesn't put prices on their website for easier comparison shopping like other dealers?
All right, well, it started with the fact that we closed our online store. And we closed our online store due to incessant fraud. Now, there are other reasons too, having to do with our business structure and our business model and working with outside representatives and doing certain things. We decided that we didn't want to have the online store. Now, when we closed the online store, we also stopped the feed to prices and continually updating prices and product, which changes so darn rapidly lately. And that's why we just have made a declaration that, okay, fine, we'll beat any price out there, match or beat within reason any price from a nationally reputable dealer. Now, is it the most convenient for people? Probably not. But here again, some of the most sophisticated companies in this industry have been hacked. Maybe the most sophisticated was hacked, and client information was disseminated to the dark web or threatened to do so unless they were paid a Bitcoin. I'm not going to mention the name of the company, but I will tell you they are probably the most sophisticated platform in the industry. I've met with the people who own their company. They came into my office to try to buy my company a couple of years ago. I went through the procedure with them. I wanted to see what it was like. I turned it down. The one thing that I wanted from them more than anything else was that platform. I'm like, my goodness, what an amazing platform. I can sell online. I can, it just seems so sophisticated. These folks are Wall Street based background, very, very sophisticated programmers. And within 6 weeks of them leaving my office, after we got done negotiating, I received a letter from the owner of the company whom they work with, whom they own. And it basically said, we've been hacked. And if you get a letter like this, call the FBI. The letter basically said, Mr. Kaiser, here's what you purchased. Boom, 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 boom. Here's your address. Either send me a Bitcoin right now or this is going to the dark web. And more or less is what it said. And when I saw that, I'm like, I'm done with this, at least for now. So the bottom line is this. Is it convenient as working with an online company that lists their prices? No. But if you have enough patience and enough time to make one phone call or send one email to you or to me or one of my brokers, we'll beat the price. So it's not in your underwear clicking a mouse at 2 a.m. convenient, but we try to make it as convenient as we possibly can and be forthright and say, yeah, I know it's not perfect, but we'll beat any price. And again, I want to be analog in a digital world. I'm done trying to. Let me just say one last thing about that last deal, Dunnigan. When we finally closed it all down after dealing with all this fraud, I met with the FBI. I talked with them face to face. You know what they said to me? That this is state-sponsored Eastern European hacking. And I'm just a little precious metals company. We do pretty darn well, but I don't have an IT budget of 6+ figures a year to stave off state-sponsored Eastern European hackers. I want nothing to do with that. And someday you and I should just have a podcast or a conversation of all of the fraud that I've seen in this industry. And hats off to the companies that seem to deal with this and do it well. We know who they are. They're great at it. I can only imagine what they must deal with on a weekly basis, the aggravation. And I just said, you know what? Ain't worth it to me. So that's why.
And I wanted to underscore there, I think when you said at the beginning, because of rampant fraud, not at Miles Franklin, but in the industry and in online information theft in general. Okay.
The stuff that I've seen in that realm, Dunnigan, makes me laugh, almost applaud. Like, my goodness, these are creative people. If they only did things for good, they could really do amazing things in the world.
What the world would be like if people got a real job.
Yes. Yeah. It's really shocking, to be honest with you, and frightening at the same time.
So I'm not going to let you off the hook. Still on this question that we have, the pain gets worse here. Is Andy not putting his prices up because he wants you to go through their broker's buying process, where the broker will charge you higher premiums? I think you already put a nail in that one with the no, we'll beat anybody else's price. But is there anything else you want to say on that?
Dunnigan, we feel very blessed to have you represent Miles Franklin. In fact, I find you to be one of the most delightful people I've ever met on many levels, personally and professionally. And I am honored to have an association with you. And I think you can vouch for me. I've always said to you, the only thing that I really have a problem with is overcharging. I give you the liberty to do with what you want. Now, look, there are a lot of people who want us to be the lowest priced person in the world and then call and ask us a million questions and send us 12 emails and expect to be treated with, white glove service, which we want to do. And there are some instances where the amount of effort should be compensated a little bit more. But here again, the only thing that I tell my brokers or people like you is, yes, you're free to charge what you want. Keep it within reason, within a reasonable limit. we never overcharge, ever. And when I see overcharging by one of my employees or one of my outside reps, it's about the only thing that gets me really angry. Really. And so there are people who will call in and know what they want and place a big order. They're going to get the sharpest price in the world. Boom, done. There are other people who will send you 33 emails, call you 19 times, and you have 4.5 hours worth of conversations. And you people out there, you know who you are, and we still treat you the same way, and we still match and beat prices. Am I trying to avoid the question? No, I don't know the best way to answer it. Simply to say this: I've built a model of brokers who have worked with me, some for 25, 26, 27 years. It's the model we use. We started this company before the internet. I don't want to be an internet-based company. I don't want that model. I find there are better models and people want to talk to somebody. So for whatever reason, right, wrong, or indifferent, done again, this is the model we have chosen. But I'll tell you one thing. If any of my brokers ever overcharge one of you out there listening, or to the person asking the question, let me know. It will be about the only thing that really gets me aggravated at someone who works for me. And other than that, you'll get the best price and the best service. And if it's 5 or 8 or 10 cents more than another company, well, so be it. And if it's a problem, we'll lower our price to match it. But the point of it is, it'll never be egregious, ever, ever. Hope that answers it.
I think it does. And I have to share, I'll share one more tidbit related to that, and that is the thing that gets me upset too is when I hear stories from people on a recurring basis saying that they want to maybe do some selling now of a little bit of metal or they want to convert it back from one form to another, and I hear how they were sold it by a different dealership at what kind of a premium, and it just makes me cringe to think of the stories that people have been subject to and the premiums that they've been convinced that they had to pay for one reason or another. That really gets me fired up.
Let me add one more thing. I gave an interview recently with your son, and he, in the comments section, there was a couple people said, yeah, these companies just sell you high-priced bullion, and then when you sell it back, you get under melt value. Well, that's not true either. And I'd like to mention that for a moment. Let's go back to March of this year when Silver Eagles were $10 over the price of silver, and we were cheaper than anyone at $10. You can vouch for this. We would have paid people north of $7.50, $8 plus over the price of silver to buy their Eagles. We always will offer people a bid price that is in excess of the spot price if the market is indicative of that. And for this entire year, it has been. So if someone were selling, they'd get more than spot on everything. Gold Eagles, as an example. People are getting north of 2% when they sell their Gold Eagles to us. I don't have the numbers in front of me because I'm not sitting at my desk, but I just want people to know that premium goes both ways. Premium is on bid and on ask, not just on ask, not just when you're buying. When you're selling, you'll get the premium too. And I've been saying all along that I do think you'll see premiums go much, much higher into the end of the year. It's just a function of supply and demand. And ultimately, I think you'll see when, like we see the Ohio Police and Fire Pension Fund dip a toe in the water with $800 million. When you see Warren Buffett buy Berkshire Hathaway into American Barrick, you're beginning to see big money enter this market. Just little bits, which amount to not much more than a rounding error at this point, but it's coming. And I think as it does come, and as more and more people purchase precious metals, to me, I think you'll see premiums increase. If I had to guess, they'll increase. And not just when people are buying. If they want to unload their product too, we'll make sure that they get the best bid price in the country, not just the best buy price, but the best sell price too. And if there's a premium to be had on that material, they will be paid that premium indeed. So just wanted to make mention of that as well.
There's a question here. A lot of people are looking at trying to decide if they do now want to dip their toe into precious metals for the first time. They're wondering, well, should they get the metals directly, or why don't they consider mining shares? David Brolt says, why wouldn't someone invest the vast majority of their precious metals money into mining stocks or royalty companies rather than physical metal, so that when the metals run like we think they will. When gold doubles, the mining positions will do a lot better, more than double. So reduce mining stocks at that time and add to physical metals then.
Well, I mean, that's assuming a perfect world. I mean, yeah, I think there is room for mining shares. I think mining shares will make people very wealthy. The leverage in mining shares is exponentially greater than in physical metals. When I used to, a long time ago, when I started buying precious metals mining shares, I would reach a certain point. Let's say I put in $10,000, and anytime it got above 15, I'd pull off 5 and buy physical. I think if we look at the model that the Swiss have employed for the better part of 300 years, we can answer that question a little easier. So the Swiss have built a asset allocation model in the shape of a pyramid, where the base of our pyramid are things like precious metals, a paid off home, cash in the bank, etc. Things that are low growth, low yield, low risk, and the physical precious metals would go in the base of that portfolio. The middle portion would be something maybe 20% of our assets, with the base being 60 or 70. The middle portion of our assets would be maybe utility stock throwing off a dividend, something along those lines. I used to throw treasuries into that middle portion, but when they throw off next to nothing, it's not appropriate. Something in the middle that throws off a little income that's not risky, but has a little bit more modicum of risk, and that's why I like the utility stocks and the income producing dividends that they offer. The top 10% of your pyramid would be the mining shares and the cryptocurrencies, at least in my allocation, in the respect that, I'll give it to you this way. In 2016, I put $30,000 into First Majestic in January. It was just over $3.35 an ounce. By July, 6 months later, and gold had done decent that year, certainly not what the mining shares did. But by July, 6 months later, First Majestic was $17 or $18 a share, almost a six-fold increase in 6 months. That's what your listener is talking about. And I agree with that. But by the same token, look what First Majestic did in 2017. And that's what I am talking about. You get your lunch handed to you in mining shares if you're not careful. And that is why they should never be viewed as the same thing. They are not the same thing. They are cousins. They are related. They are of the same genealogy, but they are not the same thing. It's like, if things get really bad, do you want stock in Kellogg's or boxes of Frosted Flakes? And that's kind of what I'm getting at here, is that yes, you should own mining shares. And yes, you should own physical. Do not confuse the two. Yes, you should take profit from your mining share and put it into physical. I think that an allocation where you're putting, of every dollar, 60 cents into physical and 10 to 15 or maybe 20 cents into mining shares is far better off. You're remaining conservative. You're building your wealth, because gold and silver aren't an investment. They're wealth. They're immutable wealth. The leverage that you get from a mining share is an investment and will make you wealthy, but will also expose you to much greater volatility and risk. That's really the reason why. Yes, you should own them. Yes, you should be conservative with them. And no, you should not confuse the two between physical and paper. It's a big mistake. Go bankrupt a lot quicker than you think.
One experience that I just had in the past week that really reinforced that for me, you just mentioned about gold and silver being wealth directly, was when we do have people who want to convert from one form to another, and they want to do a buyback and a swap into a different metal. I've done a couple of those for clients in the past week, and often with ordinary orders where people are mailing a check or they're doing an ACH transfer from their account, there's this period where we have to wait 7 business days for the funds to settle so that it clears completely on the banks on both ends and all that, and make sure the payment is solid. And it's like, it really hit me this week when following through and tracking through to make sure these orders were moving forward for the clients, that when that metal shows up that they send in, if they're sending in gold, for example, to swap into silver to take advantage of the gold to silver ratio, that kind of thing, that metal that they send in is payment itself. They don't even have to wait for it to clear any bank. There's no settling period. It's there. It's paid in full. It's there, and it's just another example that doesn't. we've almost lost that conception of the reality, the physicality of wealth itself, directly held and directly being able to transfer, from one to another. But that just is something I experienced again this week, and it was just that little light bulb going off. I mean, I knew it in my head, but I just felt it in my gut again this week. It was good to know.
You take a step back, and you could call that money, and you can call the paper in your wallet currency.
Mm-hmm.
That's money. That's wealth, and that wealth would be accepted and understood in every corner of this world, no matter what language is being spoken, no matter what religion, what color, what creed, you name it. That's immutable wealth from one edge of the world to the other and everywhere in between. And so that's what I mean by it being wealth and the mining shares being an investment. And certainly they're tied together, but they're not the same thing.
Yeah.
So, I think everyone should own mining shares right now. They should load up on them, but do it within that framework of 10 to 15 to 20% of your investable assets. If you hit the home run, you're going to be really, really happy. And you're not going to say, geez, I should have put it all in there. Because if you see the volatility that I expect with the mining shares, and remember, let's look at the mining shares in a different light real quick, not to belabor the issue, but let's say that the stock market is a bathtub filled with water. And let's say things get really bad and the mining shares are the sponges floating on the surface of the water and the common stocks are the bars of soap on the bottom of the tub. You pull the plug on the tub, everything's going to sink, including the mining shares floating on the surface. So here again, I just want people to be aware that there's a real delineation and difference between physical gold and mining shares, and why I'm a big advocate of it. And I have a great relationship with the folks at Sprott, and Eric Angeli, Angel with an I at the end, is my personal broker and good friend and would work with all your listeners out there. I know you talk with Rick Rule a lot. Eric is one of Rick's senior brokers, and I trust him with my life. You want to buy mining shares, they're the best in the business, hands down, not even questionable to me. But it's not the same thing as physical gold and shouldn't be viewed that way.
Good enough. Now, here's a personal one. Sun says, my first question after all these years of listening will be for Andy. Andy, when you repeat the story about my father made me promise to buy a little something every 2 weeks story, here's his question. What was it that you promised your father to buy every 2 weeks or he'd fire you? And what was it you've been telling your father you've been buying, and what is it you've actually been buying? And looking back all these years, is there any precious metals you wish you'd been buying every 2 weeks?
I'll answer the last first. I wish I would have bought more palladium. And I owned some, but not a lot. I was buying it. It was $300 an ounce. Never really thought it would amount to very much. Boy, was I wrong on that. But I've been buying gold, silver, platinum, and palladium in any capacity, some capacity, every 2 weeks since basically February of 1990. I have never missed a 2-week period, ever. And that was a promise to my father when we started. And it was his way of getting me to be my own retirement plan, to look at gold and silver as wealth. And I have. And so some days it was 1 or 2 ounces of silver. Some days it may have been $10,000 worth of gold. Who knows? But every 2 weeks, for as long as I can remember, for over 30 years, it has been the very first thing I would do when it was payday. And I thank him for that. In fact, my father and I really come from nothing, both of us. And I think that's why he said that. He knows what it's like to wish you had a savings. And so do I. And, for better or for worse, that was his one piece of advice. And quite frankly, God willing, it's not for a very long time. But when my father is gone, it will be the one thing that I will remember about him, maybe more than anything. The one piece of advice that he gave me that put me in a position to be where I am on many levels today. And anyone out there, pay yourself first, period. No matter what, you pay yourself first. You put away some money for yourself and your family first, always. And that's what I've done, including even being late on making payments that I owe for a car payment or whatever when I was younger. I always paid myself first. That was my promise to him. Some days it was more, some days it was less. But the lesson to be learned is that you start saving one paycheck at a time, 1 ounce of silver or gold at a time. And before you know it, you're like, holy moly, look what I've saved. And that's what happens over time. And so I've been saving gold, silver, platinum, and palladium in varying degrees and in varying shapes and sizes and forms. And I got a lot of everything. And that's what happens after 30 years of sticking to it. My sixth grade teacher would have called it stick-to-itiveness. And it's something that I lacked as a younger man, but thanks to my father, I've been able to hang true to that. And I've done that. And I'll continue to do it till the day I die. And someday, my medal will become my children's medal, hopefully. I hope I never need to use it. If I do, for an opportunity, not just in an emergency, I'm darn glad I have it. If not, I give it to my kids. And hopefully they're able to do the same thing and give it to their children. Because you know what, Dunnigan? I think sometime before both of you and I get much grayer, the bills in our wallet, that currency in our wallet will be hanging from a frame in the Smithsonian, and a new system will come. But gold and silver, when your great-great-grandchildren are looking at the coins that once belonged to great-great-grandfather Dunnigan, it'll still have value. And that's what gold and silver have always meant to me, thanks to the lessons my dad taught me way back when, 30 years ago.
Well, Andy, I guess that was the question that I wanted to wrap up with, because it was close to home for you and probably to the hearts of a lot of our viewers as well. And we're just grateful for your continued presence here with us and giving the benefit of your experience. So thanks for joining us again here on Liberty and Finance.
It's always a pleasure. It's always a pleasure to be here with you and to talk to your awesome listeners. And I will look forward to coming back. I'd love to come back at least one more time before the election, because I think we're in for an interesting 8 weeks, or actually take that back, more like not even 6 weeks anymore. So it's coming quick, and I'll look forward to coming back maybe a week or so before the election, and we'll see what's happening.
Yeah, when we met up with you at your operations center and vault, and we were on our way back, we specifically were trying to avoid the Twin Cities on our way back, and in fact, there had just that night before that there had been some big unrest there, so we went through the UP and so on to come home kind of the boring way, and we were glad for that.
Yeah, it's very sad. I'll leave you with that. It's very sad, Dunnigan. It's sad to see what has happened to a city that I used to be so proud. I know you used to live here too, and I know you loved it. It was a wonderful place to grow up. It was a great place to call home. I was proud of it, and I'm not so proud of it any longer. And just driving through downtown Minneapolis is a stark realization of even the best laid plans need to be reevaluated. Things that you never thought would happen or would see, like, oh my goodness, it happened. How did that happen? And then what? This is all about reluctant preparation. This is all about contingency plans. This is all about wealth preservation and being your own custodian, your own insurance company, your own 401k. These are all about the things that we're talking about. And in most respects, Dunnigan, and that's why I said opportunity, not just emergency. We hope that the things that we're doing will allow us to take advantage and give us the courage to take advantage of not just emergencies, but also opportunities. And so God bless you and the work you're doing. You're doing an amazing job helping so many people, and I'm honored to be part of it. So thanks for having me back on, and I look forward to picking up where we left off, hopefully in just a couple of weeks.
Thanks, Andy.
You got it, buddy. Take care.
To acquire gold and silver, just go to libertyandfinance.com. When the main site comes up, click on Bullion Sales. That's libertyandfinance.com, Bullion Sales. You'll see my name, Dunnigan Kaiser, my phone number, and my associate, Kaiser Johnson, his phone number, our email, libertyandfinance@protonmail.com.